Hello and welcome back, ladies and gentlemen. Thank you so much for tuning into ETBFSI Converge. On third day, we are going to discuss the rise of co-lending, pros and cons in this particular session. I'm sure this session is going to be really interesting because co-lending is a very, very interesting part right now where the banks, the NBFCs, and also fintechs are partnering with NBFCs are trying to look at this particular segment far more aggressively after RBI's notification came on the co-lending last year. I have with me top speakers from the industry, and let me introduce them to you one by one. My first speaker for this panel is Mr. R. Sridhar, the Executive Vice Chairman and CEO, IndoStar Capital Finance Limited. Mr. Sridhar, glad to have you.
Thank you. Thank you. Happy to be part of this panel.
Thank you, Mr. Sridhar. My next speaker is Mr. Rakesh Kaul, the CEO, Clix Capital. Rakesh, glad to have you.
My pleasure, Amol, and so good to be in this panel. I look forward to a very interesting session today. Thank you.
Sure, Rakesh. My next speaker is Mr. Sashank Rishyasringa, co-founder and MD Capital Float. Shashank, glad to have you.
Likewise, Amol. Thanks so much for having me back. Pleasure to be here.
Thank you, Shashank. And my last speaker for this panel discussion is joining from Ahmedabad, Harshvardhan, Lunia, co-founder and CEO, Lendingkart. Harshvardhan, glad to have you.
Thanks, Amol, for inviting me for this session. Look forward to a wonderful time here.
Sure. So, gentlemen, NBFCs are no more a shadow banking right now. When it started, everybody started calling them a shadow banking, but they have actually become an integral part of the whole financial ecosystem. And that we realized with the two, large NBFCs when they faced some challenges like IL&FS and DHFL, then the whole system realized the kinds of challenges that the NBFCs face and the kind of potential also which the NBFC space is having. There are a lot of changes and the developments happening in the NBFC space in last couple of years. Most of the NBFCs are partnering with fintech, offering digital solutions, and they're actually reaching new highs every day. Things are changing with the RBI's notification specifically on co-lending, and that's what I will explore with you, gentlemen. And I have a couple of common questions and many specific questions as well. So I will start with a common question. And the question is, what kind of difference co-lending model has brought to the industry? And Mr. Sridhar, I will start with you.
See, history, if you see, there is always a partnership between banks and NBFCs. And NBFCs have been catering to segments of the economy which have not been catered to by the banks. So NBFCs traditionally had asset side strengths. For example, used commercial vehicles, gold loans, equipment finance, and affordable housing. These are all innovations NBFCs have done over a period of time. And they have always lacked the capital. So the capital came from banks, which had a liability side strength. This partnership had been going on. But recently, as you mentioned, there were a couple of casualties in the NBFC industry, IL&FS and DHFL, which created a credibility crisis. So that time, you will know during that period, nobody wanted to lend to NBFCs because everybody had been painted with the same brush. At that time, NBFCs went through a liquidity crisis. Even well-managed, well-backed, well-capitalized, reputed NBFCs couldn't raise any money from the mutual funds. Commercial paper became a villain of the incidents. So that is the time RBI brought this co-lending concept, which is an old wine in a new bottle, which had come with a twin objective. One is that it flows liquidity to the NBFC. The second one is the objective is to channelize this flow of credit to the priority sector, like MSME, vehicle finance, affordable housing. These are all sectors which the government and the regulators wanted credit flow. But banks cannot lend directly. So they brought in this new concept of co-lending. So this co-lending is good for companies which have been finding it difficult to raise capital. So many NBFCs have signed up with a lot of banks, and ultimately when things changed, quickly in 6 months' time, things changed and they have been able to access capital directly. This went into the shelf. So co-lending today is a product which is there. But in my opinion, but for few, it has not taken off in a manner which had been anticipated. So this partnership which is being in the concept between banks and NBFCs have been working only when there is a liquidity crisis. This has not been a product which naturally banks and NBFCs feel should be pushed. The NBFCs are only seeking a partnership with banks when there is no money.
Correct.
When the situation changes, there is no co-lending. The primary reason is at the top level between a CEO of a bank and a CEO of NBFC, they feel that we should do this. But as and when it percolates down to the operating level, there are a lot of psych issues. So why should I go and stand in the bank to get the money on one-on-one? Why don't we do it and sell it as a bunch to as a securitization? So there are a lot of operational reasons due to which it has not taken off. So my opinion is that even though the partnership between banks and NBFCs have been there for quite a long time,
Right.
this new product is slightly different because both have to agree on a particular customer and credit and processes. So banks which have not been lending to this segment have very little visibility and understanding of the processes involved. And particularly in unorganized sector, there is absolutely no understanding. So their processes become an obstacle. So that is where time is taken. People are not able to get money. So NBFC's big objective is turnaround time. So within 2 to 3 days, they disburse the money. But if you go to a public sector bank, it may take 30 days. And it is not sure whether 30 days also money will come. So that is why, even though there is an intent, there is a need. This, in my opinion, has not taken off. And it may not take off unless there is a real liquidity crisis. Then both, try and lend money to a particular customer is a very difficult and challenging task.
Thank you.
If I may add
Sure.
a bit of a additional comment to Mr. Sridhar's view,
Sure.
I mean, completely agree with him that it has been a story of stocks.
Yes.
But I think the kind of challenges NBFC sectors have gone through in the last 4 or 5 years, one thing is for sure, that all NBFCs have realized that always there will be something which is unanticipated will come up. And in my view, co-lending is now here to stay. It has not taken off in the way the government had intended it to. It has not taken off the way NBFCs had hoped to get a completely unhindered access to capital from banks. There are a lot of operational challenges. In my opinion, going forward, this is going to become a very, very terrific opportunity despite it not having done well so far.
So Amol, if I can also add
Sure,
a few
sure,
perspectives and from fintech perspective, right? I'll add
Yes,
two things
yes.
that we've been observing. I think what Sridhar sir and Rakesh have suggested, right, are very, very prudent things. Last 2.5, 3 years, right? We've been working on co-lending, and I think 1920 was first year where we did almost 150, then last year 300. This year it's almost shot up to 1,300 crore, right? And we've seen certain more reasons over here. One of the reasons, Amol, we've kind of realized this year is that a lot of focus is now going on digital distribution, right? Earlier, a lot of emphasis was on people, right? People, branches and branch and spoke model and everything. What we are realizing, a lot of institutions who are working want to go to tier 3 and 4, right? Want to access customers over there, give them money, make them part of their journey as well. So a lot of partners that we are receiving, we are working right now, want to go to the towns, cities where they don't have access, right? Either they don't have branches, either they don't have physical infrastructure, want to access customers over there in those branches and everything. So that's what is literally one thing. Secondly, I think what we are also realizing is that, and maybe Sashank can add on that as well, is that overall in co-lending, we are every partner that has reached out to us wants a fully serviced stack, right? When I say fully serviced stack, basically they said that you distribute or you originate these clients for me, you underwrite for me, you collect them for me, I'll give you a fixed assured return and you give me a margin or a FLDG to cover it up, right?
Right.
So
Right.
the moment we started discussing with them in terms of co-sharing, co-risk sharing, co-revenue sharing, it goes down the drain, right? And it again ensembles into the same problems as we are discussing. But the moment you tell them that we will be a service provider or a BC for you or a service provider, you can use a fully service stack, you can use the platforms, you can use the data dashboards. All your teams will have accessible to everything that my team has access to. You can see the customer journey is where they are feeling comfortable. Secondly, I think secondly or on this only, what we've realized is in co-lending or in the conventional co-lending that we had been doing earlier as well, right? Somewhere or the other, the customer journey gets broken, right?
Okay.
In the sense, either in form of distribution, if the customer comes directly on the bank platform, and then it comes to our underwriting platform, or then it goes to their underwriting platform, or in terms of agreement, if it comes on our agreement platform and their agreement platform, if the collection is first routed by them or by us, right? The co-lending process gets difficult and doesn't work, right? If the customer, whatever way you work with your co-lending partner or a platform, if the customer journey still stays seamless across the board, right? Then it's a great solution. So across like our journey as well, we've been designing the same with all our partners, making them agree on few things that we can work, making on agree on few things that we cannot work and stuff like that. But if a seamless customer journey is designed, then it becomes much more easier and simpler for partners to choose as well. So from digital perspective, what we are realizing is a need from the areas underserved, products from the areas underserved, and similarly keeping in mind the customer, and a fully service stack is what we are realizing is helping us work and build on this.
Okay. Shashank, you also want to add?
Sure, Amol. So honestly, I think we have had a very different experience of co-lending in the sense we've been at it for about 6 years, and I think it has come to actually redefine our business.
Right.
And today, if we look at our platform, we've co-lent with banks successfully to over 3 million customers. And we're doing almost 250 crores of co-lending every month. So for us, it has actually been a game changer. And I think the simple reason behind that is technology, right? Co-lending was envisioned to be a smoother and more seamless way for NBFCs and banks to collaborate, as Mr. Sridhar said, where NBFCs could focus on origination and servicing, and banks could be warehouses of capital and risk. And in most developed economies, the tool that achieves this model is securitization. Now, unfortunately, in India, for a variety of reasons, securitization has been small and clunky. You have a holding period, you have rating agencies, you have a lot of manual activity in rating pools, etc. The idea behind co-lending was that banks could actually underwrite on the fly and thereby get more transparency into the risk that they were buying, and it could actually happen faster. Now, unfortunately, I think a lot of co-lending in the industry has evolved as a manual process, which effectively means instead of one entity underwriting and servicing a customer, two entities are duplicating the work. And in our view, at least, the only way that co-lending works at scale and does work for us today is because it is entirely automated, right? I mean, the entire process for us from a customer applying to getting a co-lent loan takes about less than a second. And that's the only way that the model scales. But on the flip side, when it's built that way, it scales beautifully. And it is actually far more efficient for us than either raising wholesale debt, which is asynchronous with origination and has all sorts of other issues of ALM, et cetera, and it is a lot more efficient than securitization, which obviously is a kind of a much more clunky and bureaucratic process given the way it's defined today.
Right. Very well said, Shashank. And I think some meaningful, summary from all of you in terms of why, about the co-lending model. So, Mr. Sridhar, I will come back to you and let me give you, what you can say, take your perspective here specifically. Is there a fundamental challenge with the banks? Because bank has its own traditional structure to lend to their customers. Fintechs, NBFCs are far more digital savvy and they are believing in automation and they have their own ways of it. So is there a fundamental challenge over there? And there is a big mismatch there.
Yeah, definitely. Because banks have been trained to be a wholesale financiers.
Right.
They have been lending to NBFCs and NBFCs were doing onward lending.
Right.
But some banks, private banks, have directly got into retail because they realized that in order to create value and spread the risk, you should also have a share of retail lending. So many banks like HDFC Bank, ICICI, Axis and all that have created a huge retail portfolio, particularly in the mortgage space. But what Harsh and Sashank have been mentioning is something different from co-lending, which had been tailor-made, because once co-lending comes in, there are innovations which happen, which is adapted to different situations.
Right.
So the digital lending is a consumer lending,
Yes.
where a borrower's CIBIL credit bureau is enough with KYC for you to disburse the money. But I have been specifically talking about a borrower who has a collateral also to lend. See, if you get into a mortgage financing, or you get into an MSME or a vehicle finance, apart from your KYC and a credit bureau of the borrower, which you can do through digital quickly. But what will happen is there is a physical intervention is required if there is a collateral is involved. So you have to value a house, you have to value a vehicle, then you have to arrive at LTV, there is an execution of documents. There are government agencies involved, like your RTO, your sub-registrar, complex. That cannot be done through digital. So consumer lending will flourish through co-lending. But here, what Arshad Sashank mentioned is they are only sourcing and managing, but they are not putting any equity in the transaction.
Right.
Completely being done 100% by the banks. It's a slightly different innovation, risk sharing and all that, that will work. But if both of us will have to lend to an asset, that is where the complexities definitely come. So the DNA of the bank is wholesale lending.
Right.
And decision making is highly bureaucratic, particularly in the public sector.
Right.
So you enter into a headquarters understanding with the bank, and then you go to a Rajasthan, one district, one taluka. That branch manager is going to be different. Understanding is going to be different. So it's difficult to operationally to do that. So bank have been finding it difficult to do each and every agreement, each and every borrower transaction through co-lending. Rather than that, they were earlier giving money as a term loan or cash credit and onward lending. That was easy. One.
Right.
They were only evaluating a borrower who is an NBFC.
Right.
The second one is NBFCs have been able to bunch up the loans and then selling it to these banks as a securitization transaction. That has also been going on. But this is slightly different. Each and every borrower, you have to do a credit check processes. So operational issues, and from the NBFC's point of view, only when there is a liquidity crisis, there is a need for them to look at this opportunity. Otherwise, if there is a capital availability, they're going. So if you look at the NBFC industry, large companies, 10 or 15 companies, have been managing a 90% of the assets. Out of the 10,000 and odd companies, the balance is catering to only 10%.
True.
So those 15% of the 15 companies are now very comfortable in terms of capital. So there is no co-lending happening there.
Okay.
But when it comes to IndoStar, we are partnering with ICICI Bank, and we have plans to at least do 1/3 of our total lending through them. It's more strategic, not arising out of a liquidity constraint. We have enough capital and enough liquidity. So co-lending can happen even without liquidity constraints. It can be more strategic also. That we are doing. But in my earlier period, when I was Sriram Transport CEO in 99-2000, when we had no money, we were doing co-lending with Citibank.
Okay.
Car finance for 5 years we have done.
So
co-lending has been happening in a different name. We have been calling it franchisee partnership scheme and all that.
Right.
So my point is that it's good, but it has been fair weather scheme for large companies. But for fintech companies, it is a boon because they can just tie up, and through digital, they can lend hundreds of crores quickly. There is no liquidity problem for them. They manage the asset source, credit checks and all they do. Money comes from the banks. So that will work. But what I was mentioning is slightly different.
Okay. I noted your points, Mr. Sridhar, and thanks for giving those historical examples as well. But is it that, and I want you to answer this, Rakesh, is it that the banks have an upper hand so they can dictate the rules? Because at one side, the fintechs and NBFCs also came into the picture because of the areas and the market which banks could not cover. And that is the value proportion that the fintechs and the NBFCs are actually trying to create in this space. So on this co-lending platform, are the banks using their dominant position to dictate the rules and the norms?
So no, absolutely, and I think to Mr. Sridhar's point, yes, fintechs can play a very critical role in consumer co-lending, but that product suite is also expanding, and now a lot of MSME loans are also being co-lent together with banks, and credit programs have been built, which are completely digital and completely unsecured. So a lot of risk models have been built to do that, and that is where, Amol, to your point, the real strength of new age NBFCs, fintechs is a value that the banks are appreciating, that they can risk score a MSME sitting in a tier 3, tier 4 location, which ideally a bank would have never looked at without a very large collateral. But today, NBFCs and fintechs can bring that value. Banks still have an upper hand, undoubtedly, because of their scale, their size, the balance sheets that they have, and also the cost of fund advantage that the banks carry. They do dictate a significant part of the conversation, undoubtedly. And this is, I'm speaking from both personal experience and a lot of industry discussions that we keep doing. They do dictate terms. But what they have also realized is, and the kind of pressure that the government is now trying to exert on especially the public sector banks to focus on certain segments that traditionally have not been big for these banks, right? Look at an example of healthcare, or let's look at an example of MSMEs. PSU banks, as a percentage of their overall balance sheet, they hardly have any loans to these sectors. But today, when the pressure from the government is so strong on these few specific sectors, they are coming to the table with more meaningful and equal weighted conversations. At least my experience is a bit different now from a time when they had a significant upper hand. I think they are now having much more logical conversations and are willing to listen to the fintechs and the NBFCs in the conversation. At least that's been my experience.
Okay. So Harsh, I will take your perspective here quickly because you are partner
Sure.
with a lot of banks, and also
Yeah.
Sashank, I want you to also add. Is the due diligence major problem? Because ultimately the fintechs have bought a different ecosystem when it comes to a due diligence. I mean, when I spoke to a few fintechs, they have created an alternate credit score itself. And the bank had
Yeah.
its own traditional set of statements, salary slips, and this and that, right? So is that a major issue while matching a due diligence, because banks are worried and they don't understand what kind of due diligence the fintech and the new emerging NBFC has done because their parameters are different. Is it also the major challenge that you see, Harsh?
No, so I think Amol, it can be entity specific as well. From our perspective, right, Amol, we've crossed $1 billion of lending, right? Almost 7,500 crore worth of lending pan India. We've done that to more than 150,000 customers. We've given out in 12,000 pin codes compared to 19,000 pin codes that are there in the country. We've given loan in Guwahati, Jammu Kashmir, Jamnagar, and Kanyakumari. And we've not seen 99% of our customers ever, right? Now, another customer has seen our office and everything. So I think it's again a vintage. Amol, we've never had a question of credit underwriting from our co-lending partner, right? Because they see that we've done this across our journey, across our length and breadth of our working and everything. So we've not had it. I think our discussions more, Amol, rotate around data privacy, infosec requirements, right? Localization of data, because if you're using Amazon Web Services, where are the servers located? So I think, like Sashank suggested, these are more technological, technology-led or data-led discussions that we have with our partners. And again, Amol, I'll emphasize the fact that a lot of lenders, right? When we say, and like Sridhar sir suggested, yes, we kind of are serving the underserved segment, right? We are kind of doing newer products. We are doing the people, right? I'll give you a simple example. Amol, 70% of my customers have less than 3 years vintage, right? 70% of my customers don't have proper bureau score, and 70% of my customers have still a bank balance of more than 50,000 in their account, right? All of them are educated online. But if you go in a conventional institution, because of their vintage or their score, they might not get credit, but they perform wonderfully well for us. And that's an alternate model which we have built. So the idea is that if you're catering to a particular segment, if you've done enough work, they don't ask you. From our perspective, we more have of what kind of data output will they see, what kind of technology integration or API integrations will they have, where's the data localization and everything. But yeah, these are kind of specific models that we have built. I think for younger organization, obviously, the ones who've not proved themselves, Amol, are still working, are being still not seen size and scale. Those questions can be there, Amol.
Shashank, I want you also to add because you also a different proportion with the banks. I mean, and you're also absolutely into digital lending space and partnership with many banks. What is your experience in terms of the due diligence? Do you see some challenges, some mismatches?
I think Amol, Harsh hit the nail on the head, which is ultimately, I think more than your credit policy, what it comes down to is the vintage of business that you've been doing and the confidence that the bank has in your underwriting on a through cycle basis, right? And I think that's an important point about co-lending, which is that we have skin in the game, right? 20% of every loan actually comes from our balance sheet. So it's not 100% off balance sheet like was suggested earlier. And we may have done about 3,000 odd crores of co-lending, but we've done another 7,000 odd crores over the last few years on our own balance sheet, right? We actually follow a philosophy that when we launch a new product, we do it on our own books for at least a year before we even talk to a bank about co-lending. And even when we do that, we have sort of a regular mechanism where we're sharing static pool data, collections, roll rates, et cetera. So I think the confidence really ultimately derives from the vintage of the business, the product, our ability to show cohort loss curves, right? Flow rates, efficiencies. And that's where the banks develop their confidence. And once that confidence is established, then syncing up on due diligence is relatively straightforward. But it's the skin in the game and the vintage of doing a product or a business that really counts for, I think, the most when getting a bank to sign on to a particular process.
Noted your points, gentlemen. So let me ask one question, and try to understand more in terms of what will work here. So understanding the digital collaboration can be really big beneficial for the banks. Understanding the liquid infusion by the banks can be really beneficial for the fintechs and NBFCs. Considering these two major points, Mr. Sridhar said, twin objectives. What will really make co-lending successful? If we could have some bullet points. And Mr. Sridhar, I will start with you.
As I had mentioned, this is finally the benefit of co-lending is ultimate consumer and customer. He is getting credit. Either you get it from bank directly or through fintech or NBFC. Finally, what happens is there is a credit flow to the credit-starved segments of the economy. That has been the main objective. So we have heard both Harsh and Sashank saying that in terms of fintech, it has been a big success and there is credit flow to underserved segment. That's a welcome sign. But there are other segments which I had mentioned where there is a collateral involved. There are complexities are there. So there the volume of business which is being done is difficult. So what I am trying to say is that now if you see there are different tiers. For me, I am a co-lending partner for a bank, right? But there is a small NBFC which has got only 50 crore of AUM or a 20 crore of AUM. He becomes my co-lending partner because I have liquidity. I am now networking the co-lending small NBFCs which are finding capital as a big constraint. So we are having a co-lending approval from our board and we are now aggregating. There are private financiers who are all registered NBFCs, particularly in the automobile financing. You will find thousands of people. So if you go to Jalandhar, there are hundreds of NBFCs registered, but they are all medium and small. If you go to Calcutta, there is an association, hundreds of NBFCs are there. So throughout our country, the economy has been flourishing all these years, not only because banks have been funding, but there are small private financiers who have been financing the neighborhood, the known customers who have been doing it, but no process, nothing. I know him, I am giving no documentation, nothing. But now the compliance requirements, your KYC requirements, all that have been coming into play, they also have to get organized. That is happening, but where is the capital is coming from? So the co-lending is happening in multiple layers. That I do for ICICI Bank, I become a co-lending partner for sourcing an asset in a particular asset. But because I have excess liquidity, I am doing it for small NBFCs. I am aggregating them. I am providing them liquidity and put their customers in my balance sheet.
Right.
Because they cannot, by virtue of their size and process lapses, they cannot become a co-lending partner to a bank.
True.
So it has been a good scheme which has come, a concept, which is going to happen in multiple ways. So fintech consumer lending can happen in a big way through bank partnership.
Okay.
Asset financing can happen by the bigger NBFCs with smaller financiers. For example, you take two-wheeler financing, you take old car financing. These are all small people are doing in different places. For them, from 20 crores to going to 50 crores is not at all possible. So that 30 crores we can provide and take their assets in my balance sheet by providing them the technology and training processes.
Okay.
It's not going to happen from bank to them. It will happen to an NBFC. NBFC will do both.
Sure.
I will be a co-lending partner and I will also be a co-lending partner with a smaller NBFC.
Noted.
So that is what is likely to happen going forward. And that is good for the economy because it is flowing the credit to the underserved segments.
Right, Mr. Sridhar. Rakesh ji, what do you think? What will work?
I think while I fully agree with Sridhar, but I'm a big believer of technology. I think technology will ultimately be the biggest answer for most of our problems. I mean, in our experience, the biggest challenge that we have seen in co-lending getting to the next level is understanding and appreciation of technology at all levels. So a lot of the large public sector banks who are very keen to start co-lending, ultimately, they falter at the area where integration of the co-lending mechanism comes in. So that's why, people like Harsh, and other companies are trying to build that middleware, a very strong platform, which can connect, banks on one side, NBFCs on the other side, and customers on the other side. I think that is going to be the biggest growth engine that is going to come in, especially for NBFCs who are willing to put the 20% balance sheet in a co-lending model. I think a very seamless integration of technology has been, in my view, the biggest bottleneck. And if any bank which has understood that and is taking the lead in building that middleware or trying to either buy it or integrate with platforms like the ones that have come up in the industry, they will see a huge growth in co-lending. So in my view, a significant part of the challenge can be resolved because of technology. And like all big initiatives of the government, there are always teething issues and we are going through them. Some have been resolved, some are still, there are challenges. But technology will ultimately overrule all of them, and I think it will become a seamless engine of growth and the original vision of giving loans to the underserved and unserved will happen through co-lending. I'm a big believer, and I think it's going to happen sooner than later.
Sure. So after taking view from Mr. Sridhar and Rakesh ji, Harsh and Sashank, I will tweak a question slightly.
Sorry, Amol.
Yeah,
if I can add to this.
Sure.
Do you have time if I can add? I have a little bit
we
long
have
answer
3-4
for this,
minutes.
right?
Please go ahead.
Yeah, from fintech perspective. So, Sashank, Amol, from our perspective, right? I'll just quickly run you through on what we think, right? And from what digital companies think, right? I think 2000 to 2010, right? I think the retail was largely run by banks, HDFC, Axis, HSBC, Citi, Standard Chartered, SBI, PNB, right? And I remember days where we used to go to a branch where the AC branch was there, the branch manager was sitting with tie and everything, and the experience was wonderful, right? Overall, 2000 to 2010, the retail was done that way. 2010 to 20, we had a lot of newer players, right? Bajaj, Capital First, Fullerton, Sundaram, Shriram, Manappuram, Muthoot. Everyone said, okay, we do our core business. We've done wonderfully well over there. We will start doing multiple stuff. And that's where the retail got more complex, right? The idea was to expand, but a lot of it still focused on the larger towns and cities, right? Amol, to be precise, 2020 to 30, the retail is going to be, the participants are going to be Google Pay, Amazon, Flipkart, Navi, Cred, Capital Float, Lendingkart, IndoStar, Clix, all of us put together, right? And we cannot discount. It will be Uber, Ola, Swiggy, Zomato, payment companies, Paytm, everyone else, right? So if you're just thinking of it from perspective of banks and NBFC, I think it's not that gonna be that easy, at least for any of us to build business for next 10 years, right? We'll have to be agnostic. We will have to understand of where the distribution will come from, customers will come from, what all data will be available for us to evaluate, and what all services will a customer need, right? Essentially, a customer might not need a 20-30 year loan in future, right? If the income goes up, or might need a 40-year loan as well, right? Which might not be there. So I think in terms of kind of products required, in terms of changing nature of people also, we are going to cater to, right? If our population is going to be between 25 to 65 almost, right? Their needs will be very different from the earlier generation needs, right? Right now, a guy buying a car or a house or a foreign vacation is very different age, right? I remember my father when he got the first car, right? So it's been age gap difference. So I think from our perspective, if you ask me, the only way to solve for this is collaborative approach of capital and technology being merged. It's not going to be easy. It's not always happened that the people who had capital were as agile in technology. So it will be a merger. And co-lending is one of the best things to bring few of those strengths of people together. So that's the way forward. It's the way forward. It's not exactly the everything answer to solving the underserved needs of the country, capital needs of our country, but it is one of those things on which, if you ask me, future or pillars of the underserved segment of lending of our country will be built, right? So that's my perspective.
No, very interesting perspective, Harsh, and I'm glad that the half the name that you said specifically after 2020 are here with me. And,
yeah, exactly. No, and all of these are hopefully all of us will be there in 2030. But I think we all also need to be cognizant of other players who are sitting by our side, right? I cannot discount Google Pay, Paytm, Flipkart, Amazon, right? For that matter, or maybe Swiggy or Zomato as well, right? They will be sitting in the same room with us and doing lending per se, right?
Yeah, sure. I mean, I'm actually waiting for Swiggy to deliver my food, and the person asks me, "Hey, Amol, do you also want a loan along with your food?"
Quite possible, right? Quite possible. Or do you want an insurance? Can I cut an insurance right now for you, right?
Yeah, I will deliver it along with your food.
Food.
Sounds good. Shashank, I also want you to add on the same. How the co-lending will work seamlessly in the industry, according to you.
So Amol, if we just take a step back, right? I think like the bulk of India is a triple B country, but we have a banking sector that wants triple A risk, right? And I think that is basically the problem that all of us have jumped in to try and solve. But at the end of the day, whether it's co-lending or securitization, the exam question is, how do you improve risk transmission and deepen capital markets? Mm-hmm. And until we do that properly, we will all just be nibbling around the edges. Securitization is the mechanism that works in most countries. For whatever reason, I think we have been quite scared of it as a country, right? And there are genuine issues with securitization, right? There's rating agencies, there's lack of transparency, incentive alignment problems, etc. So we created co-lending. But I think as Mr. Sridhar points out, co-lending has its own set of problems and may not be the right model for all sectors of the economy and may work mainly in the digital space, right? So I think if we really want to solve this fundamental problem, it will have to be some marriage of securitization and co-lending that on the one hand solves for transparency and incentive alignment. So maybe you use account aggregator to make sure that the data for underlying loan pools is more transparent, it's more real time, it's validated. You don't necessarily need a rating agency if you have that level of data. But on the other hand, maybe you allow, for example, direct assignment models to coexist alongside co-lending, so that we're not stuck in this world where a bank and an NBFC is trying to underwrite the same customer twice. So I think some marriage of securitization and co-lending will go a long way in solving the fundamental problems, because today we have built two solutions that are both suboptimal in their own ways and work selectively for different types of market participants. And the ultimate loser is the end consumer.
Okay, I think noted your points. The time is already up, but before I wrap up, let me take one quick question. Please treat this as a rapid fire and answer only in 30 seconds. And I will start with you, Sashank. Since we discussed co-lending far more in a detailed manner and a fashion, I want you to tell us, and this is the question for all of you. Sashank, tell us, what kind of changes will the whole India will see in the credit market once co-lending takes off, or once co-lending comes into the far more meaningful manner? Banks, fintechs, NBFCs all come together. What kind of changes do you see in the credit market? Do you think that the India's credit market will really pick up? There will be a boom in the credit market? Sashank.
Massive expansion of very small ticket retail credit in every village in the country.
Okay, Harsh?
So I totally agree. Massive expansion, and I think in terms of boom, when we say boom, Amol, I basically it means that you are giving somebody more than he requires, right? We're still not at the basic level. I think we still have a long way in serving the basic capital needs of people, right? Somebody to buy insurance or investments or loans, right? So I think the needs of people will get served during this decade, at least with co-lending. We still have a long way to go in seeing the boom in this sector.
Okay. Rakesh?
Oh, absolutely. I think that is why we are in business. It is that hope, it is exactly that data that all of us read in tons of reports. The 350 billion credit gap for MSMEs, at 11% retail to GDP penetration, it's one of the lowest in the world. I think if co-lending can successfully the entire if I'm not mistaken, as per the last report, 77,000 crores of liquidity of banks is sitting with the RBI, right? So imagine so much liquidity sitting unutilized, and this tremendous demand outside in the economy. I mean, it's a question of how do we match it. I think co-lending is a very, very important tool. It is, of course, with all the challenges, all of us need to solve for it. And if we do, I think it's going to be unparalleled growth for the economy, for the consumers, for everyone. It's going to be a huge win-win for everyone.
Sure. Mr. Sridhar.
It's a welcome, scheme where with the partnership of people who have liability, people who have credit management come together to address the needs of the ultimate borrower. The only thing is that we need to see that the leverage of the customer don't go up.
Right.
So simply because you go to a computer and take a loan and you keep borrowing and you again mess up the credit system in the country, then the regulation will come like what has happened in the microfinance industry. It will happen. So that we need to be careful in credit evaluation. And if we are filling up the gaps in the economy, then it's not only the personal loan, but it should be activities which are going to help the economy grow. That should be the priority focus. If that happens, then we will be marching towards the government's vision of 1 trillion economy quickly.
I really appreciate and admire your points, gentlemen. Thank you for sharing your perspective at ETBFSI Converge and joining us. Thank you, Sashank. Thank you, Rakesh. Thank you, Harsh, and thank you, Mr. Sridhar, for sharing your inputs. Thank you so much.